Hello everyone, we are back with another episode on currency and commodities updates. Today we will be discussing about gold, precious metals outlook and what lies ahead for 2023. So before we start, just a small request to subscribe and hit the bell icon to receive more updates on commodities and currency markets. Now let's start. Gold, the most favorable asset class for 2023. What we have seen in the first half of the year, gold has outperformed almost all major traded commodities. It has given a returns of 7 to 8% year to date as compared to other major traded commodities, despite declining by more than 8% from its all-time high hit in the first week of May. But what are the reasons for gold to hit an all-time high in May? The declining inflationary scenario, recessionary concerns, slowdown in global economies concerns that led to gold to test its all-time high in the first week of May. But the resilience in the economy, despite the aggressive tightening by the central banks, have led gold to correct by almost 7 to 8% from its all-time high levels. Now, moving ahead, what are the triggers for 2023 which could drive gold further and which could still prefer to remain gold the most favorable asset class? Although we are not expecting the gold to deliver that much returns which it had in the first half of the year, but still it could end the year with a mildly positive returns for the second half of the year. Let's see some charts here. The first chart which I see is the leading economic index of US, which is being published by the Conference Board. This shows that despite the US economy in the second quarter showing a good robust numbers of 2.4%, despite that the concerns remain that in the coming quarters, because of this leading economic index going into the negative territory, we are expecting that there will be a slowdown in the global economy in the coming quarters due to the effect of higher interest rates. Coming to the second chart, that is the IMF projections. IMF has although raised its economic forecast for US to 1.8%, but in the 2024 they are expecting a slower growth of 1% for the US. That is being highlighted here, and that is already being indicated from the higher interest rates which is persisting right now. So these are all the positive scenarios for gold. But going ahead, the manufacturing PMI's activities also which we are seeing in the first half of the years have been in a contraction territory. That has been also bode well for gold because due to the contraction in the manufacturing activities, gold has always historically tend to outperform equities. Even if it starts rising from here, gold is expected to still deliver a positive return as compared to the equities from the second half of the year. Now coming to the next part, that is the gold-silver ratio. As compared to other precious metals, gold has still given positive return, but the gold-silver ratio has declined since October 22 from about 90 levels to around 80 levels currently, and that has also seen that silver has outperformed gold in the current month. We might expect silver to give some positive returns and continue to outperform in the coming months, but gold is expected to remain volatile, and we do see that gold is expected to still perform well but may not deliver all-time high as we have seen in the May month. Now going ahead, what we see is that on MCX, gold is expected to trade in the range of 57,700 on the downside, and on the higher side it could test around 61,800 levels also in the near term for next 1 to 2 month scenario. But for silver, we are expecting a range of 71,750 on the downside, and on the higher side 76,800 levels for silver. And so these are our expectations for the precious metals in the next 1 to 2 months. And as I said, gold is still expected to deliver a positive return for the current year. So these are our updates for the precious metals, and hope you have gone through these updates, and we will be coming up with more updates further. Thank you very much.